Hi, I'm Jonathan Banks, Executive Automotive Analyst at NADA Used Car Guide with this month's industry update. For the most part, July followed the same economic path we have seen most of the summer. The economy remains stable, but with little growth, and we have not yet seen any data that would suggest a dramatic move one way or another. Demand for automobiles remains strong, with new vehicle sales continuing to trend at a 14 million pace. Used vehicle demand also remains strong, which supports a return to a seasonal used price decline, partially driven by a shift in demand to new vehicles as we move into the exciting months of the auto industry, with more new vehicle launches on the horizon. These launches are usually accompanied with great deals on the outgoing models. All in all, the market remains very strong, and even with the influx of trade-in vehicles, according to auction sales data, high-demand used models 5 years old or younger are down in volume by about 8%. We have seen a larger volume of vehicles over 5 years old, but when looking at the overall pool of auction sales of vehicles 7 years old and younger, we are still down about 2%. When you consider how tight used supply was last year, and under the assumption we have stronger demand in 2012 than 2011, the supply situation for used vehicles still remains tight. New vehicle incentives remain on NADA's radar since they are indicative of how well manufacturers are aligning new vehicle production and demand. According to auto data, per unit spending in July is down by about 2.4% compared to last year's figure, and year-to-date spending has only increased by 2%. On an industry level, this is great news for used vehicle price performance. However, we all know that manufacturers are using strong rebates to drive sales on targeted vehicles late in their life cycle, as well as vehicles in highly competitive segments. NADA believes this strategy is very positive since it offers consumers great values on new vehicle purchases while creating a limited downward pressure on the value of a consumer's trade-in. In fact, NADA believes consumers with trade-ins or lease terminations are still in a great position to make another automobile purchase. The primary reason is that depreciation on used vehicles remains very low by historical standards. According to a recent NADA study, annual depreciation in 2012 is expected to be just below 16%. In dollar terms, this means a $12,000 vehicle would depreciate by about $1,800. Putting this into perspective, a vehicle at the same price in 2007 declined by about $2,700. This is great for consumers for a variety of reasons. First, cost of ownership goes down, and second, a consumer is more likely to have equity in the vehicle they are trading in. As we move through August and September, expect year-over-year used price comparisons to remain in the negative territory. But remember, the drop-off in used prices in 2011 started in late August and continued through October. This year, if market conditions remain stable, NADA expects a more moderate seasonal path in 2012 compared to 2011. This means that used prices by the end of the year should start having more favorable year-over-year comparisons, resulting in another banner year for used prices. For more information, please download our August Guidelines report at our website. Thanks for listening.